Okay, second week of October, and we are looking at a stronger dollar for the week ahead, in my opinion. We started off last week, I had the same opinion last week. We started off bad, but then it picked up and it actually closed higher than it opened. Um, I've done a piece at FXStreet, and I'll basically just run through that because it's essentially what we need to know for the week ahead in terms of the dollar. Now, this is related to the gold price. Um, so I'm anticipating a move into around about 1675. We've got the US Consumer Price Index as the key event, as well as FOMC minutes and retail sales on the US calendar. Um, so, a quick recap then of the non farm payrolls. Essentially, it probably does little to sway the dollar one way or another. Um, so we'll be looking for the CPI report to stake a bigger claim in that direction. Um, Nonetheless, the headline was decent. We saw a drop in the unemployment rate, which is going to be a thorn in the side for the Fed as it battles with inflation. So it does little to help them in terms of the supply and demand aspect in terms of the jobs market. Um, we should see some resilience really in the US dollar, um, which will be interesting. That is so long as the Bank of Japan doesn't step in at any point soon. That could be a bit of a hindrance if they were to do that. It would be a drag for the dollar, um, but maybe only temporarily. Anyhow, so that's the thesis: is that the dollar will remain stronger, especially in the face of geopolitical risk and concerns in Europe, the Ukraine war, North Korea rearing its ugly head again, and so forth. So the dollar milkshake theory is something that you should look up if you're not well versed in that. There's plenty of information on that on YouTube. Um, so in terms of the dollar, then, so I'm seeing on this 4 hour chart, we've got the price that's on in the US dollar DXY. The price is corrected into a 61.8 retracement of that trend, right? So we've come in low. We've got this head and shoulders, as loose as it might look. This W formation. This is all bullish. We're taking out this prior area of support, which is again expected to act as a support. So long as we've got 111.95 and 111.55 on the downside as key levels of support, and obviously the 61 retracement. So we're bullish up into this price imbalance. What from there, I'm not sure what will happen. It may just shoot up and take out the 11450s. If it doesn't correct and come back into retest here, um, catching shorts off guard for a continuation higher. So that's my thesis on the US dollar, um, and bearish for gold. We've got this harmonic bullish pattern on the longer term charts, the daily chart there. But we've slid out of this resistance. So if we sort of zoom in, there you can see we've slid out of that resistance. So potentially bullish for a move up into 1760. We've got this price imbalance that the price could be moving down. We've had this head and shoulders play out already up into resistance. So we're currently correcting lower. So that's what I'm feeling for the immediate future. Um, a move into the pricing balance, potential support over here. You've got a 61 retracement, 62 retracement down at 1659. So we could see that. I mean, that's a pretty decent move lower this here. So we might see this start to decelerate in here, and then potentially move higher. But that doesn't play into the strong dollar thesis. So who's to say that we can't see a break? I talk about it in here. You can go and fetch the news. It's on the FXStreet website under analysis. What am I talking about here? Is it with the price correcting? Right. So yeah, I mean, I'm talking about the crab formation. So you've got 116.14 as the lows. And 116.59. We just mentioned that as daily lows. If 116.59 were to give, that would be pretty significant. So for the open, I mean, this is really just putting my finger in the air. But you've got this trend line resistance. We've already broken out of a very. This is the hourly trend line resistance, and then we've got this. We'll move down to the chart. But so long as we're below 117.02, the longer term outlook is bearish for the week ahead, at least. Yeah, so I just suggest going into looking up this analysis on FXStreet. The title is Bears Eye a Run to Key Support near 116.75. But for the open, we could see a bit of a pickup and a move into 1700 potentially. I mean, we're sliding out of this trend line resistance. We could move in for another test here, but this would be my prediction for the price action, resisted by the dominant trend. And then if we move over to US yields, we're clearly in an uptrend. We're moving in on 100% retracement of this harmonic pattern. The trend is your friend. That's all I can say about this, really. We've had a move up, a correction of that move up impulse. We've got support in here now. I'll have to redraw all of this structure, but I mean, it's pretty plain for the eye to see. A break below 3.83, 3.82-ish, this structure here. Yeah, I mean, we've got yesterday's highs as support, Friday's. So this is Friday, sorry. So we've got Thursday's highs as support. Below there, we're heading into Thursday's lows. And on the upside, with the trend firmly in place on the upside, if this were to hold, then we're looking at 4% in the near term. Could take a couple of days to get there. CPI is going to be the key event for the week ahead. That will fall in on the 11th, I believe. No, sorry, the 13th. They've likely stayed strong into September, with the series registering another large 0.5% month-on-month gain. So in this respect, it will be critical keeping an eye on the oil price. Shot higher. So there we are. And while we're on that note, I'll be actually looking for a meaningful correction. So that would play in well for the US dollar CAD thesis, looking for higher levels for dollar CAD. It's had that correction now. I think that's all we'll see of the correction. And I'm anticipating a move up to target 138, and then the last week's highs of 138.40 to 135, 138.50, and so on. And then essentially bearish for, well, all else against the US dollar, really. Euro, GBP exceptionally weak. Aussie's falling off a cliff. It's run into a double bottom, so we might see a bit of a correction here. We're at last week's lows. Anyhow, we will be again applying Stacey Burke's methodology. Did plenty of homework on that over the weekend. So we shall see what gives for the open. Yeah, I mean, we were pretty coiled up across all pairs really on Friday, so that could be telling, and we could be in for some explosive start to the week. For instance, I mean, we've got this Aussie that's coming out of this coil, so up we come to go down, maybe a fast move into 63, the figure, on a break of 63.50 and these double bottom lows, just as a reference point really for the day ahead.